Jeremy Harper here. I've got Ben Bracich, and today we're just going to be talking a little bit about financing for the real estate industry, some of the deals we've been working on, what we're seeing, a little bit of a market update. So maybe we'll kick off talking a little bit about rent roll financing.
Yeah, thanks, Jeremy. Look, it's been an interesting time historically for a lot of real estate groups. They've had a couple of different majors they'll work with, predominantly across your Westpacs and your Macquaries. A lot of that's been done because of the trust accounting systems and the def payment platforms. But what we're finding a little bit of a shift away from that recently in relation to the rent roll size.
Yeah.
So a lot of lenders now not looking at kind of under 500 managements. They're obviously taking a different view around the security position. So what we've been able to do is work with a number of other lenders in this space that will look at 500 and less managements. We'll look at it more in a commercial basis. We'll look at the cash flow slightly different. And really what that's done is open up a whole new opportunity for a lot of groups that are trying to acquire rent rolls for the first time.
Yep.
Or a lot of groups that have never acquired rent roll before.
Yep. So what does that mean if we've got sort of multiple directors that own the business, and perhaps some of the majors maybe want to see asset backed behind them? How does that work?
Yeah, correct. So I mean, historically, once again, in any type of finance situation where there's multiple directors, often you'll see a position where the directors having to cross-guarantee each other. That can also be a bit problematic at times if the balance sheet or the asset position of each director is slightly different. So once again, I'm now working with a number of lenders that will give us an option to look at limited guarantees as well. So just actually isolating the risk or the debt to the shareholding of that individual director.
Okay, and so we can do purchasing, even small rent rolls, refinancing. So let's just say the owner wants to get some working capital against the rent roll. We can do that.
Yeah, absolutely. Another good example of that is where there's an acquisition of an actual business. So you might have. Just as an example here, you might be looking to acquire another business as you're starting to grow. You've got an opportunity to actually purchase that business, its goodwill and the fit-out requirement. So we can look at actually wrapping that all up with the rent roll into one facility for the client as well. So it's now giving real estate groups an option whereby if they're going to the majors and the majors turn around and say, well, basically, really need to look at a rent roll 500 plus. It's stopping a lot of those smaller acquisitions. We've actually got footprint to be able to do this now with different lenders.
Okay, and you talked about store fit out, so let's talk about that. So that's for new, existing, renovating a store.
So if you're going through a rebrand,
Yep.
So going from one group to another, we can also look at actually wrapping up the exit fees of that particular franchise as well. So that's a really important one. So often you'll find a lot of groups from a tenure for a certain period under contract. We can actually look at refinancing the exit fees of that particular group to rebrand moving forward.
And so if they want to fit out with new furniture, computers for the team, we can get financing for that as well?
Yeah, so we've got, there's probably a couple of different components of financing. If we look at the rent roll in isolation, we can look at actual business financing against cash flow.
Yep.
So we can look at doing a leverage transaction against the actual cash flow of the business. And then we can isolate again and have a look at just what we call equipment finance or asset finance, which is around fixtures and fittings, rebranding, signing, all the things that are required to get an office up and running.
Yeah, and you said asset finance, so motor vehicles for the dealer principals.
Well.
They want to update to the latest model that they've got. We can look after them as well.
Absolutely, and quite a large request that we get is around vehicle financing for the fleet, either for property managers or for the principals themselves or the agents. So we can cater for all those needs, but also quite simply too these days, if you're ABN registered and it's been longer than 2 years in that profession, then we've got a lot of options to actually get low doc kind of financing where it's all asset backed.
And get that set away pretty quickly as
Very
well.
quickly.
Because obviously they want to get into that brand new car.
Yep.
Perfect. Thanks, Ben. That was really informative. If you have any questions about real estate financing, please reach out to myself on 0405 118464 or drop Ben an email.
Great.
Thank you.
Cheers.